Darío, hoy y Gordo, hoy tenemos un invitado, tuvimos un invitado, pues que me parece una estrella, para mí la más importante, o sea, de todos los podcasts que hemos hecho, el conocimiento que personalmente a mí más me interesa es el de este man, porque es un conocimiento combinado con capacidad técnica, capacidad de invertir, que es una cosa que uno normalmente no ve en mucha gente. Es decir, conocemos buenos inversionistas que saben pensar en flujos de caja de descontado, hablar sobre la compañía y sobre la tecnología, pero muy pocas veces tenés como el matrimonio de las dos cosas, de ese conocimiento y de la capacidad de un análisis técnico. Y este man tiene la capacidad de hablar y pensar sobre una compañía, pero leer y entender el código. Además que tiene una experiencia brutal, o sea, trabajó en una de las agencias de publicidad más chéveres de Nueva York, es el fundador y CEO de Node.JS, el que haya tirado código sabe qué es esa vaina, es un quant durísimo en matemáticas, asesoró en la estrategia de cripto, imagínense, uno ¿cómo es que Satana Nadella uno decirle, hey, por aquí es el mundo de cripto, por aquí te tenés que posicionar. Y en este momento, pues tiene un fondo que se llama Asymmetric Capital. Nosotros, la entrevista dura más o menos una hora, es toda en inglés porque de verdad tiene un conocimiento técnico muy específico que todavía no le tenemos mucha confianza pues a los traductores, algunos experimentos, entonces toca tenerle paciencia y hacerle el closed caption ahí pues la inversión pues para que vaya soltando las palabras. Pero qué personaje este Joe McCann, mucho conocimiento, ojalá podamos repetirlo. Y otra cosa pues que nos tiene muy contentos, no sabíamos, el man alcanzó a tener oficina en Medellín y tuvo equipo de desarrollo cuando estaba dándole pues a lo de Node.js. Entonces, sí, es que yo he ido a Medellín y la conozco perfecto, pero ya hace un par de años, entonces chévere también ese punto.
Muy interesante. Bueno, nada, ahí queda la preview y obviamente decirle a la gente pues que aprovechen y tengan la oportunidad de escucharlo porque realmente es fascinante.
Hey, Joe.
Hey, how's it going?
Hey, Joe, good to meet you, man. How are you today?
I'm well. How are you?
Very good. Very good. We still have two more that are pending to connect. Let me just give you like a quick introduction of us so that you kind of have like an idea of why we are kind of like harassing you and following you on Twitter and inviting you. So we're a bunch of friends. We've been on startups I've been in startups for almost 25 years. I actually lived in San Francisco for 10 years and spent some time on a startup where I actually helped it raise almost like 100 million. I don't know if you have heard about cultivated meat, good meat, It Just. Well, anyway, it's a startup in California, in San Francisco. By the way, Ricardo, who just connected, also works for Goodberg and Silverstein, the ad agency in San Francisco. So we have like a major group that we're all like kind of groupies. We really follow you and pay attention to what you say. For example, Darío is actually based out of Barcelona. I'm currently in Girona in Spain. Gordo is in Pereira in Colombia. And we still have one more that is pending to connect, and he's actually based out of Miami. But anyway, just to give you like a quick background, and we're just like four friends that we do a lot of startup investments, invest in stocks, equities, and we just like to entertain ourselves. And about a year ago, we started this podcast, but in Spanish, about just technology and business. And we happen to be hardcore fans of Solana, and that's why you ended up on my feed, man. And anyway, we don't want to make it very extensive, but we have a ton of questions for you, man. The whole idea is just to take a deep dive, just kind of like poke your brain, share a little bit of alpha. We actually started recording right now. I was telling my friends Ricardo and Lucas that the only guy that I really pay attention is you, because you really, really post some damn good alpha, and you're definitely going to get an extra set of followers from Latin America because you have some deep insights. So guys,
awesome.
Today we have someone that is really important. This is the guy that I've been bragging about on our chat. We have a chat about 75 people, which are common interest is in investing. It includes everything from hedge fund managers to to CEOs of different like well-renowned startups in the world. But I constantly tell them, hey, look, did you just heard or read what Joe McCann just said about X and Y? For example, you for me were like definitely a holding point during the crash of November for Solana, and like because I was reading, he's saying there might be like a gamma squeeze pending. I'm like, okay, he's still bullish on Solana, still bullish, even though I'm being bullish since 2021. But anyways, and so I'm not going to talk anymore. I was just giving kind of like a quick insight. Guys, we're talking here with the ex-CEO and founder of Node.JS. So if you've been in the world of coding, that's pretty significant. Joe, Ricky, as well as you, happen to work at an ad agency in New York. I think one of your good clients was actually Estelle Artois. And you're right now, I mean, you work for Microsoft too, but now you're heading Asymmetric Capital. So why don't you tell us a little bit of your background? And you love hiking on Marin County, but you now moved to Portland. So why don't you tell us a little bit of your background?
But still West Coast, okay. Yeah, sure. So where should I start? So I've been a technologist and a trader going on 23 years now. I have a degree in philosophy with a focus in logic, which doesn't really get you a job. It gets you into law school, but I didn't go to law school. I decided to teach myself trading and programming in the year 2000. And that has obviously served me well now, but my career path has been kind of all over the place. So I was a trader on Wall Street. I worked in the startup ecosystem. I worked at one of the top design agencies in the world, Frog Design. I went and also worked at a B2B SaaS startup pre and post IPO, and then worked at an ad agency, Mother New York, one of the top ad agencies in the world. Started an open source enterprise infrastructure company called NodeSource, which is the Node.JS company. And yes, Node.js, wildly successful open source project, arguably the most popular open source project of the last decade, with effectively 100% of the Fortune 500 using Node.js, as well as pretty much every Web3 and crypto project today uses it in some capacity. So it's a truly kind of ubiquitous technology. So very proud of that, and have a lot of experience in open source for many, many years, for right or wrong. Yeah, and then look, I've been in crypto for probably since I found Bitcoin in I think 2011, but was thinking about it from a trading perspective. I kind of got the technology and thought it was pretty powerful, but had other things going on and started a company and decided to not focus my interests there, unfortunately. But got back into crypto in 2016 pretty extensively when there were more exchanges, there were more assets, there was real volatility. I love trading volatility. So I got really active in 2017. And then in 2018, I actually transitioned out of the CEO role of my company at NodeSource and decided to take some time off. And this is when I was supposed to be hiking through the woods of Marin County. And instead, I started writing quantitative and systematic trading strategies for crypto.
Yeah, just so you know, that's where Ricardo and we spent a lot of time. I mean, we hiked and rode Stimson Beach more.
Bicycles there, yeah.
I mean,
yeah.
I mean, that's what we did for the past 5 years, just riding through the backwoods, and Marin County is just fantastic.
Yeah, I mean, look, during COVID, I rode my mountain bike more than I have in probably 20 years. It is an amazing place to just live, experience, hike, mountain bike, hang out at the beach. It's a really, really special place in America. So, however, kind of pre-COVID, I got recruited to join Passport Capital, which is an institutional hedge fund in San Francisco. John Burbank's kind of a legend in the traditional hedge fund space. Was early to crypto, and I went over there and built out the quantitative and systematic trading desks at Passport. But I ended up leaving in 2019, not necessarily because of Passport, but because it's extremely difficult to trade crypto at a US hedge fund. Even today, that's kind of the case, right? And so I decided to take some time off and went back into doing a lot of R&D, kind of like on the tech side, less on the trading side. Bear market, good time to do R&D, good time to build stuff, and started tracking, the Ethereum ecosystem, building some Solidity applications. That's how I found Solana. very early on, and really started to immerse myself in the kind of, paradigm shift that was happening with compute, storage, and networking. And also, in my view, I've written a blog post about it a couple of years ago about kind of the next iteration of the internet, which I think is, permissionless. I think, Chris Dixon says read, write, own. All of those things are very relevant. And meanwhile, I was then recruited to join Microsoft in the cloud and AI organization in the developer division. So this is, GitHub, VS Code, all the tooling and infrastructure and whatnot. And my job was pretty unique there. It was an awesome experience. It was kind of like helping them not miss the next big thing. So I did a lot of work on the M&A side. I worked with Microsoft Ventures, working with startups and evaluating deals. And then also doing a lot of, emerging technology research, primarily in Web3 and crypto. And so one of the things that I did before I left Microsoft to start Asymmetric was provided a lot of insight and feedback into the kind of the Web3 strategy for Microsoft across every line of business. And so we're starting to see some of that actually get implemented today, primarily the crypto wallet in the Edge browser, which was the very first thing I suggested that they actually go do. So Microsoft's a great experience because it's working at a massive company. Very, very different than a startup, but understanding how those types of organizations move and function and make decisions is important as an entrepreneur, as a startup investor myself. And so in 2021, late 2021, a close friend of mine, this guy, Steve Jang, who's the founder of Kindred Ventures, amazing guy, amazing entrepreneur, successful entrepreneur, turned very successful VC, just got added to the Forbes Midas list. He was like first money into Coinbase and Uber and Tonal and a bunch of other amazing projects, Magic Eden, et cetera. He kind of, coerced me to start my own fund in a positive way. So I decided to leave Microsoft and start Asymmetric. And we launched Asymmetric's fund officially in June of last year. We've been in operations, kind of call it early 2022. Asymmetric, the way I kind of describe it to people is like, yes, we're an investment fund. We have an early stage VC fund, and then we have a liquid discretionary multi-strat hedge fund. And we run it like a technology company. I mean, my view really is that if you're going to be an institutional or professional investor in crypto, digital assets, and Web3, you probably need to understand the technology. It is such a different industry to invest in, and if you don't have some like core technical acumen, you're gonna get rugged. You're gonna invest in things that are just not real, or lack the ability to have product market fit or define a new market altogether. And so team is small, but it's a very seasoned set of founders. Actually, about 70% of the company are former exited founders. In addition to that, half the team are engineers. So we do a lot of deep analysis and research when it comes to crypto and Web3, as well as building in-house our own proprietary portfolio and risk management software that gives us an edge on managing our risk. We have been very fortunate, even in the bear market, to dramatically outperform every single benchmark that we track. And a lot of this has to do with, how we manage risk, and, how we see the macroeconomic landscape and applying that to crypto, and then B, having the tooling and internal kind of software to enable us to manage that risk and make informed investment decisions. So long story, but wanted to give you guys kind of the overview there.
Yeah, that's excellent, because it actually sets the tone. And Lucas finally joined us. He's out of Miami right now. Another good co-host and very curious about investing. And he has a ton of questions, which I will actually help articulate. But one of the things that really impressed me when I actually started following, my thesis has always been, well, I got to invest in a technology that I understand. So obviously I started following Anatoly, Armani, and I probably have heard every single podcast where Anatoly has sat down and explained the trifecta and what does this decentralization mean, and Nakamoto coefficient. And it was this guy, which probably you have heard about him because you know about DePIN, which is Frank from Genesis Go, the guys from Shadow Drive. And it was about a year and a half ago, where he actually had this conversation with Knox-Trade, and they were talking about RPCs. And when Frank said something, I'm like, hey, you don't understand. Our RPCs, they get burned like in, I don't know, 3 weeks, 4 weeks, because that's how much the hard drives actually get hit, because they're just writing the information. And so that's when I started developing this thesis, when I suddenly started creating these parallels. I don't actually know how to read code, but I know how to follow the stories. And because I'm an industrial engineer, I kind of like usually think from first principle, but I started driving this parallel because I remember a story. I've been doing startups since 1999. And I remember this story from the initial days of Google, where Chris Sacca was the guy that was commissioned by Larry and Sergey to go and buy a shit ton of data centers. But the most important thing is that Microsoft couldn't notice what was it that they were doing. And so what they were building was speed of capacity to index and crawl more pages to give a better result. And to me, this is exactly what Solana is doing. But the biggest issue that I have is because I don't read the code, it's articulating it to other friends. So to me, the three most important things are stateless, composable machine. To me, it's like, okay, they're building the super biggest computer. Maybe you could elaborate a little bit on that. Also, because you actually, I think your entry point on Solana was 1.6, and you said this is ridiculously undervalued. So why don't you talk a little bit of what does stateless composable machine mean, and why is it so significant?
Yeah, sure. So, I think one of the things about trying to or I guess maybe a superpower that one can develop is taking incredibly technical concepts and making them digestible by the ordinary masses of people. Trying to do that with Solana's code base is an impossible task. But what I try to do is use analogies to describe the power and impact of something like Solana relative to Ethereum or other L1s that are out there. And so, the easiest way to think about it is if you look back at like the history of CPUs, processors in general, there was a moment where we started to add parallelization to those chips. And when that happened, the kind of performance of computers dramatically improved. When you have the ability to process, 4 instructions at the same time instead of 1, or 16 instead of 4, it's just simple math, right? Things can get done faster, right? If 4 of us on this call are all trying to accomplish a goal at the same time, we're going to accomplish the goal faster than if we do it in, with just one person, right? That is how I think about Solana, is that if you look at the pattern that existed with chip architecture design and how chips changed and improved at the instruction set level, what did that impact have on the applications that could run on those computers? Well, they dramatically improved the performance, the spectrum of applications that could be built was very different. And of course, over time, these things just constantly get better and better and better and better and better. Solana is designed with parallelization in mind in a couple of different ways. At the hardware level, it takes advantage of the actual metal, whereas a lot of the L1s.
I actually tried with a friend to configure one, and it was kind of like out of our league. I mean, we knew it was going to be a machine that was going to cost anything between $5,000, $7,000, and you had to put it not in the house, but in a data center, and it was going to be running you like $1,000 bill. But we just like, this is too much. We're not good. But yeah, they're good machines, not raspberries.
Yeah, exactly. I mean, yeah. So if you have a machine and Solana can actually take advantage of running on the actual metal itself, it's going to be faster. Moreover, the Solana programs and validators that are running, when hardware improves in terms of performance, and hardware is constantly improving, you see what's happening in the GPU space. As that hardware improves, the code base for Solana doesn't even have to change. and it actually gets faster, right? Because the hardware, the underlying hardware is something that Solana takes advantage of. And if that hardware improves, the code that's running on it is going to improve, right? Just by default. I saw this exact same pattern with Node.js in the early days. So Node.js, the way it's architected is that it's all open source, and it uses a lot of open source technologies to create the application runtime that is Node.js that powers the applications. Well, the underlying JavaScript virtual machine is a project called V8, which is the JavaScript virtual machine that runs in the Google Chrome browser. What that means is anytime that V8 in the Google Chrome browser gets better, guess what happens to Node.js? It gets better by default because it has this dependency on V8. Well, Google has a very, very vested interest in making Chrome the fastest web browser on the planet because they want people to use it, and they've been successful in doing that, gaining, the majority of browser market share. Well, guess who benefited from that faster browser experience? Node.js. Same pattern with Solana. As the hardware actually gets better, Solana just benefits by default. This isn't really the case for most other L1s. The second thing that has more to do with the way that Solana is actually structured with parallelization is that unlike EVM-based solutions, state and application code, or the kind of core logic of the application, are separate. And the benefit of this is that you can now run certain things in parallel as long as they don't cross over with the state, right? So if I'm sending, a token here and you're sending a token there, well, those wallet balances don't really care about each other, right? They don't rely on each other. If I'm sending, a token to person A and you're sending a token to person Z, they don't know about each other. That transaction can actually happen in parallel. That's just not the case with Ethereum or EVM-based L1s. There are other L1s that are online now, Aptos and Sui, that have similar characteristics. But as we're talking specifically about Solana, when I was evaluating it, a few years ago, I was looking at this, going like, man, I've seen this movie before. I've seen this pattern in technology before. And if they can actually pull off what they're saying this thing can do, yeah, it's dramatically undervalued, right? Because all of a sudden you go from having this, sort of like BlackBerry mobile phone experience, which, BlackBerry dominated market share for a very long time. And they were the first one to really like bring the internet or email and whatnot to a phone. The problem with that is that it's very limited in terms of what you could do with it. And they were unable to, successfully add a bunch of new features and capabilities that users would end up loving. Enter the iPhone, completely radically different way of thinking about a mobile phone, right? And what happened? It took off, right? And now, of course, Android has the majority of global market share, but iPhone actually has the highest gross margins on any smartphone or mobile device out there. Why is that relevant for Solana? Well, I'm not simply saying that Ethereum is going to end up the route of research in motion because of what BlackBerry, happened to the BlackBerry devices. The point that I'm making is that the approach that Ethereum is taking at a core level with how the protocol works, there's a physics problem involved with how this thing can actually scale and the types of applications that can actually be built on it. It's not up for debate. It's physics. It's just the way that it works. This is why you have $10 billion in total market cap of all the Ethereum L2s right now, because the story is, hey, we're going to solve scaling through L2s, right? And that unleashes a whole new set of problems with centralized sequencers, et cetera, et cetera. The point that I'm getting to is that you start off with, the first iteration of something. It's going to capture the majority of the market because there's no other alternative. And furthermore, it's going to capture the majority of developers' mind share because there's no other alternative. And it's a new platform for building applications. BlackBerry had a significant amount of developers that were building apps for them, right? I mean, it wasn't nearly as big as something like the App Store, but there was this new place where developers could build. And some of the top engineers in the early 2000s wanted to work at Research in Motion because there was this new platform to work on. That's Ethereum in the early days. Well, now you've got all of these other Ethereum kind of clones or EVM compatible chains that haven't really modified from first principles the approach to an L1. They're just kind of like Ethereum, but different in certain ways. Well, that's kind of like a BlackBerry, but in different ways, right? Solana's like, we're starting from scratch. We're not actually thinking about how Ethereum is doing it. We're thinking about it from first principles. And the approach that Solana has taken is so fundamentally different. It doesn't have these scalability issues baked in, right? And so I think the long story short here is that you started talking about like, stateless, composable machine, right? And the power of something like Solana, or it could be another L1 that has, better, performance or different characteristics that make it better. The reason I think Solana has such a unique carve out in the space is that the types of applications that you can actually build with a protocol like this are currently only possible on Solana. And I think one of the guys from Solana Labs actually gave me the title of being the first one to say that publicly on Twitter, that it's only possible on Solana. I didn't even realize I did this. It's like years ago, but it's true, right? If you look at things like, the compressed NFTs that have happened, you look at companies like Dialect that are doing smart messaging, the things that Backpack is doing, like these are just things that are not currently possible on any other L1. We could have like a huge leap in computer science, and I'm never betting against engineers. I've learned definitely to never do that, but we could have a huge like step up improvement in computer science where all of a sudden Ethereum's L1 defies the laws of physics and somehow miraculously figures out a way to have the same scalability and performance characteristics of Solana. Great. That makes these chains more competitive, and developers will, seek out one or the other or eventually support both. Which I think is a net positive for ultimately the end users that are going to be using these Web3 applications. So I think on net, like the way that I think about Solana is they started from first principles in a fundamentally different approach. There's a number of patterns that have existed technologically in the past that feel like what Solana is doing. And so if Solana can continue to improve on its underlying protocol, add additional validators to create, a more redundant network, and then also, improve the developer experience, which they certainly have done, they've got a real shot at being a major contender for Web3 application development and Web3 usage going forward.
Yeah, it's amazing. One time I actually tried to explain to the group what composability was, and the best analogy that I could actually find was like, remember when you were a kid and you were playing with Legos and you started building 1, 2, 3, 4? Well, the advantage is if you're like on a small building and you're on floor 3, the advantage of building that on Solana is that if you wanted to put lights on the floor number 3, you would have to like get a flashlight from the outside, but because you built it on Solana, it's already wired up. And so that's what composability means.
That's right.
I don't know if it's a good explanation, but I try to do my best. And the other one, which is the one that Lucas, who's connected, always asks me, like, by how do I value it? And so I'm not worried about, me personally, I'm not worried about valuing it because it has a future cash flows or discounted value or whatever it is. I value it because of the future of adoption, but I fumble it and I kind of trying to explain it to him like, well, you can value it by measuring its maximum extractable value. And that one I got a little bit complicated. Could you elaborate a little bit on why MEV is actually important? Because that will help someone like Lucas, who is much more on the old school of discounted cash flow valuating, so that you can understand the power of a network by the output of the MEV.
Yeah, I mean, honestly, I don't even think it has to do with MEV. I think it's a higher level topic beyond that. So I think I tweeted about this a couple of weeks ago. One of the so if we zoom way out, like crypto in general is a clash of two incredibly different cultures: traditional finance and developers. And when you put those two together, it's just this cultural clash that you just don't get in any other industry. Now, naturally, what people will do is they will bring with them to crypto the skill sets and experiences that they have in their respective discipline or area of expertise, right? So, for example, let's assume somebody went to business school, maybe they worked at an investment bank and they were modeling, the value of like publicly traded healthcare companies or something, right? There are very standard ways of modeling the value of that company. Discounted cash flow, price of book, whatever. There's loads of them, right? The problem with taking that and trying to shoehorn it into crypto is that it doesn't work. And I'll explain why. So I'll use another example. Okay. So back in like 2008, 9, 10 timeframe, when the iPhone was new and it was clearly going to change the world, as well as adding Android into the mix. All of these brands, and I'm sure, the ad agency guy can respect this, like all these brands were like, we need an iPhone app, right? They were out of there's an iPhone, like we need an iPhone app, right? And so what did they do? They took their website and shoved it into an iPhone.
Yep.
Right. Why did they do that? Well, they're like, well, it works in this environment. Let's just put it on this mobile device. There's a problem with that because when you look at your iPhone, where's the keyboard? Where's the QWERTY keyboard, right? Where's the mouse? Where's the display that I'm actually looking at, right? In addition to that, the iPhone or your mobile device is literally mobile. You're moving around with it. It's got GPS sensors. It's got a camera. It's got all of these other things that really don't exist or aren't really utilized, maybe beyond a webcam, in a desktop-like experience. And so what ends up happening is you have to look at the new environment and say, okay, instead of just taking what I know and trying to shove it in here, why don't we think about it from a first principles perspective as to how I should, I'm, whatever, some brand manager, how we should have an iPhone app and what it should actually do. That's the same thing as it relates to crypto. One of the reasons that I don't believe that trying to take, say, a DCF model and apply it to a network is that that's not how networks are valued, right? If you go all the way back to Facebook, when they went public, I think they were the first company to actually do this. And if you chart this, you'll see exactly what I mean. They were on their earnings calls reporting monthly active users and daily active users, right? Why were they doing this? Because that's actually the value of the network, right? Is the users on the network. Well, they can then back out of that a DCF model and say, like, if we have 1 billion users and X percent of them click on this ad, and then we can get Y revenue from it, and this is our Z profit margin, and then, sure. But the point is that the only thing that was driving the value of Facebook as a company were the number of monthly and daily active users. And as that chart kept going up and to the right, you saw their revenue and profit margins go up and to the right. And a couple of years ago, or a year and a half or so ago, they reported for the first time ever a drop in the monthly active and daily active users. And what happened to their stock price? It plummeted, right? So the point that I'm getting to is that when it comes to permissionless open protocols and networks, there is an economic incentive baked into the protocol for a reason, that is to make the network stable and secure, right? It's not a means of this is how you value the network. What has happened with things like Bitcoin mining and then Ethereum when it was proof of work, it was very easy for traditional finance people to be like, oh, well, if I just run these Ethereum miners and my input cost is electricity and the output is this many, Ether or Bitcoin, and this is the price of Bitcoin, I can kind of get a sense of like how this is valued as a miner, but then also like the broader network. Well, the problem with applying this to networks in general is that the value is rarely at the protocol level. There's another example of history of this, right? TCP/IP, the communication protocol that we're using right now to talk over the internet, how much value is in that? How much dollar value is in that? Zero. No one has made a penny from TCP/IP.
Oh.
Where's all the value? The applications that sit on top. There have been trillions of dollars of value that have been created on top of TCP/IP, right? But TCP/IP required private companies and commercial entities to create data centers, lay fiber and cable, and all of these other like massive CapEx intensive investments to enable the internet to even exist, right? What we're saying now is that that's great. All of this value has been created on top of this protocol that no one has made any money from, but people have made tons of money up here on the hardware side and the software side, and the internet is kind of dominated by a handful of software companies for the most part, hardware and software, but primarily software companies. And there are negative effects to that, right? Which is they have too much control. They can censor stuff. They can deplatform. They can do all these things that users are like, wait a second, this doesn't seem right. But it doesn't matter because they've built such a massive defensive moat at the application tier, not at the TCP/IP tier, right? So if you look at like Ethereum, or if you look at Solana, and Solana is a great example of this because a lot of people are like, but the transactions fees are like, they're so tiny and like, it costs a lot of money to run a validator. And, I'm going to lose money by running a validator over a certain amount of time if Solana is trading at like $10. And my point is like, that's not where you make money in Solana. You make money at the application tier. The end goal is you have this extremely fast and performant network that enables new types of applications to be built, new businesses to be built on top of it. Yes, the network needs to be secured by validators. Yes, they need to have an economic incentive to do that, but it doesn't make sense, in my opinion, to be like, I'm just going to invest in Solana and I want to understand how to make money from this and how it's going to be profitable, because that same mentality could have been applied to TCP/IP and you'd be bankrupt at this point.
That's a very cool analogy. Sometimes when I actually start to be doubtful of the whole thesis of Solana, I become a little more pragmatical and actually take a little bit of like how do you say this? Fixated, not fixated ideas, but ¿cómo se dice Lucas, ¿cómo se dice muletas? Crutches. Yeah, I use like crutches to help me out. And so I use them from real experience. And so back in the day, like 15 or 20 years ago, I was actually doing 3D renderings. And I remember assembling rendering farms in Colombia to do like 3D simulations. The amount of cheap computers that we had to buy was just like absurd. And at some point in my life, I ended up in Shenzhen, in China, trying to hire people just to do rendering. And then this thing, Render Networks, actually comes up. And because I also travel a lot, I'm always changing my SIM card to like get access to phone. And then Helium comes up. And so when I am in doubt of how Solana is going to make it, I start to think about DePIN, which is decentralized public infrastructure. And that's when it really starts to like click in the head. Like, to me, DePIN is kind of like the route for product market fit, because it just allows people to use the tools, which is basically what you were describing. You don't make money of the TCP/IP protocol, you make it on the layer that it's on top. And so that's when it becomes interesting. So this is a story or narrative that I had pushed to Lucas, but Lucas, yes.
Yeah, I'm a bit confused when you say exactly where you said like how Facebook initially started growing and only announced active users, and that made the price go up and up and up and up and up. And then it started getting some revenue, and then they started being valued as traditional discount value or whatever. But then you said at the end, like if you would have stayed on TCP/IP, just the network, you would have been bankrupt. So are you saying, I mean, like we're fully invested in Solana? Should we not invest that much on Solana and more on the apps and things that are going on, or do you think Solana is going to have kind of the same situation as Facebook, and then money's going to start falling, revenue start falling, and then it's going to happen?
Yeah. So the first thing I'll say is none of this is investment advice. So I can give you zero investment advice. But to answer your question, so let me kind of clarify a couple things, right? So Facebook is an application. It's not a protocol, right? Facebook is worth $1 trillion or whatever their market cap is today, because they are utilizing this underlying protocol to enable them to build an incredibly valuable business. If you were just somebody that was trying to make money from TCP/IP, you're not going to make any money, because no one has made money from TCP/IP. Like it's literally just a protocol, right? It's a set of rules for how computers can communicate with each other. There's no money in that. The money is in Facebook. The money is in Google. The money is in YouTube, et cetera, right? Those are things all built on top. And so as this relates to Solana, the big difference is that who is the person paying for the network? Well, Facebook's paying for it, right? They're paying for data centers. They're paying for electricity. They're paying for servers. They're paying for databases, right? They are the ones that own, in a vertically integrated sense, their network, their social network they own, and they own all of the things that enable that network. You can think of them as like validators, right? All the servers and everything, they own that as well. It's incredibly centralized, which leads to the problems of deplatforming, censorship, et cetera, on something like Facebook. And I'm not picking on Facebook. I'm just saying this is the case for most big Web2 companies, right?
How it is, yeah.
So the shift is you go to Facebook right now, it doesn't cost you anything, right? You just use Facebook. Who's taking that cost on? Facebook is. But then you're the product, right? And I think that the difference is that, and I wrote about this in the blog post, is that there's a fundamentally different approach to who is paying for the network. When you go try to use the Ethereum network, when you try to go use the Solana network, you pay, but then you are in control, right? You have the ability to maintain ownership over, your privacy, your information, your assets, whatever the things may actually be, right? And I think that this paradigm shift is radically underappreciated, because forever the internet has been free for users, and now we're saying it's no longer free, but the trade-off is you get all of this additional ownership or this additional freedom or this, it's censorship resistant or whatever the thing may actually be. The challenge, in my view, is how do we, like, for users in general to switch away from something that they've been using for a long time? Typically, it requires a 10x improvement in user experience, right? We literally saw this with the iPhone. People were literally addicted to their BlackBerries, called crackberries. They were just addicted to them. They could not get enough of them. Never gonna not have a BlackBerry. All those people use iPhones now. Why? Because the experience was 10x better. It's even more expensive, right? A new iPhone now is like, I don't know, $1,200 US or something, right? Like, it was more expensive, but the experience was so much better, right? And so I think that we're in this weird kind of nebulous state right now where most Web2 users are like, I'm fine with this approach for whatever reasons, primarily because it's free, right? Trying to transition them to a permissionless network where they pay becomes friction in that process of moving them over. Now, there is, I think it was just recently announced, there's a new Ethereum proposal. I forget the number, but in essence, what they're trying to enable is for Ethereum applications to fund the gas fees, right? This is actually quite important, because what has been a blocker for a lot of people adopting Web3 applications is like, I got to get a wallet, I got to fund it, I got to, like, how do I do this? Depending on what country you live in, you may or may not be able to get assets, like yada, 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 right? Now, all of a sudden, these Ethereum applications could fund it themselves. They could be like, we'll pay for the gas fees, you just use the application, right? So I think things like that, and again, it's just a proposal, it's not in the core protocol yet. I don't even know if it'll land in the protocol, but that type of thinking of saying, how do we get people to actually kind of migrate over, and what are the things that we can do to entice users to use these new applications? Like, that's a way, I think, of getting there.
You said in a previous podcast that the easiest use case scenario is just trying to send money during the weekend. And the four of us, except you, we're all Colombian. So we know the challenges of trying to figure out how to send money from the US to Colombia, to other places in the world. So that's why I was going with my point of product market fit through DePIN, because it makes the perfect use case scenario of different things. So for example, I don't know, Darío and I, we have dabbled with, and we have 4 helium hotspots. I mean, we still get confused on how to activate them, but we open the wallet and we see the thing sending signals in low RAN, and we're like, oh, this is amazing. We should get a 5G thing, because I don't know if you know, but for example, Medellin is kind of like the #1 nomad city in the world right now. So imagine a bunch of expats trying to get, I don't know, internet for the first time, while if they have a phone, they just log in, helium, boom, they have internet. So for me, the more use case scenarios where you have like DePIN applications, then the higher probability. And I don't see anything like building up on an Ethereum. There's no way a helium happens on Ethereum. There's no way a render network happens on Ethereum. And let's talk about teleport and hype mapper. It has to be on something that is like an efficient composable machine, because otherwise, I mean, I just don't see it.
Yeah. So, by the way, just as an aside, no surprise, I was very early to Medellin. In fact, I used to have an office there in Ruta N.
No way.
Yeah, at NodeSource, I had an office in Ruta N many years ago.
Wow.
Yeah, so I'm very familiar with Medellin. I love it down there, and of course, I was very early. Now everybody goes there. I was there years ago, and I actually have, to this day, the former employees of mine that I'm still friends with are all from Medellin. And because when I was building NodeSource, the Node.JS community was exploding in Colombia and Latin America, but particularly Colombia and Medellin. And these guys were putting on workshops teaching, high school women programming and teaching kids how to program robots with Node.js. And I was like, I want to hire you guys. And they happened to live in Medellin and opened up an office down there. So I'm very familiar.
That's amazing.
So how do we get you back?
I have been dying to go back to Medellin.
When was the last time you were there?
Oh, years ago. Many years ago. Yeah. And partly because the reason I haven't been able to get back down there is that I've got married. I now have 2 young kids, and I'm running a fund. So, travel in and of itself is already pretty limited. If for example, Solana through Breakpoint in Medellin, I have a very good reason to go there, right?
We know what, maybe we should we could call a few people and try to get a Solana Breakpoint. We should just like start pulling some strings to make it happen. Solana Breakpoint in Medellin, that would be awesome.
Well, and one thing I want to talk about with DePIN that is, again, I'm trying to like make it more digestible for people that may not be as familiar with decentralized industrial networks or et cetera, is there is a pattern that has existed, and why Hive Mapper, why certainly Helium are going to be and continue to be successful, is that the business model of Uber and Airbnb is such a massive unlock for levering what we call, kind of excess capacity, but utilizing mobile devices and the internet to create a market for that excess capacity. And that's why Uber was so successful. They were basically saying, like, here's all these cars that are just sitting here. There's people that need rides. If you guys live in San Francisco, pre-Uber, it was a nightmare trying to get a taxi. Didn't exist. And so, like, how do we solve this? There's all these cars that are sitting there. There's all these people that need rides, mobile device, put them together. Excess capacity, excess demand, put them together. Now you've got a market, right? Something like Helium it's not saying there's all this excess capacity and we're connecting them, but because people are now familiar with Uber and Airbnb and these other types of, kind of marketplace, peer-to-peer marketplace businesses, they're more comfortable saying, like, oh, wait a second, I can spin up a Helium node and provide internet service, and then I get paid in this token, and I can now be a part of this broader network. And so what it does is it democratizes, decentralizes internet access, right? Or mobile phone access or whatever, to the extent that now, like, I'm speaking from the United States perspective, the spectrum for, cell phones and internet, this is all lobbied by billions of dollars from massive corporations like AT&T and Verizon, where no one has a shot, really, unless you're Elon Musk with Starlink. But even Starlink here in Portland, Oregon, like, I have my mother lives out like near the Oregon coast, the middle of nowhere. She has a Starlink, no problem. Where I live, in the heart of Portland, I can't get Starlink. Why? Because Verizon and Comcast, and they said, nope, we're going to own this, and we're going to make the government say that like this is our area. You can't like inject yourself into that. That's a problem, right? And I think that if there is an alternative to users like Helium, you should be able to access it. Well, now there's really no way that the government can ban Helium. It's too late. Like the cat's out of the bag. You know, I've talked about this on previous podcasts many, many years ago, like, man, 20 plus years ago. I went to Vancouver, British Columbia, which is not far from Portland. And I went into this like cafe, and marijuana was not legal at the time in British Columbia, but like no one really gave a shit, right? And so you could actually go across the street and buy some pot from a guy and come into this cafe, and they had a little room in there where you could go smoke a joint and have a coffee or whatever, right? And when I was buying a coffee, I looked up above the guy, the cash register. I looked up behind him, and he had this hooded sweatshirt for sale that said "Outgrow the government." Uh-huh. And that resonated with me, because what that means is it's not means to go break the law. But what we're seeing with things like Helium, for example, is they're basically saying like, hey, the power's with the people. If we can just put this in the hands of tons of people, like there's really no way the government can shut it down, right? Like it would have to be an incredible, act of force and potentially violence to remove little technology nodes running in people's living rooms, right? I mean, so I think that like that mentality of taking these highly centralized, controlled physical infrastructure services and radically democratizing them, and also decentralizing them such that, if for example, the United States government tried to come after Helium, the company, well, like the protocol can exist without it, right? There's a company that we're investing in called Cube. We see, my view really is that it's the future of
Cube
crypto
exchange?
trading. Cube, Q-U-B-E, Cube, yeah. And like these guys have
They're from Netherlands, right? Netherlands, right? Cube exchange.
Sorry?
Yeah, the Cube exchange from Netherlands. That's the one that you've been tweeting about. No, okay, sorry.
Cube is not out of the Netherlands. The team is American, but they're they have like a whatever Cayman and Swiss, and all the stuff that you got to do when you're a U.S. entrepreneur in crypto. You've got to jump through all these hoops with the way that your entities are formed. But the point that I'm getting to is that they have built the architecture such that you get a centralized exchange-like experience, super fast, lots of liquidity, all the bells and whistles that you would want from a professional trading exchange, but there is no custody of your assets. You actually retain all the custody of your assets. And more importantly, the architecture is designed such that if Cube, the company, went bankrupt or was, given an enforcement action from some regulatory agency or whatever, the entire protocol and the exchange can still operate without them. Like, to me, that's such a game changer, because you're getting a user experience that is phenomenal, very centralized exchange-like experience, full custody of your assets, and then no actual like regulatory or counterparty risk with Cube, the company, such that if they go under, the thing still runs and operates.
The protocol is there. Yeah, Lucas, that's the one that I actually shared this week on the chat. I got confused. It's the one with the ice cube. That's where you start sharing your alpha drops. I'm on the wait list on that one, because that's not live. That's not live.
They should be they should be very, very soon. You're going to start to see a bit more activity coming out of Cube. So some alpha for you guys there.
So when you say outgrow the government, it leads me to I remember another podcast where you said that only 9% of on-chain happens in the US. Then why is it that everybody gets so terrified or scared when Gensler and Elizabeth Warren actually start yapping? Is it just because they're posturing and they have to do it because it's the process of the natural world order, and where they have to apparently show that they're doing something, but it's at the time irrelevant? I was amazed at the stat that the only 9% on-chain is the US. I thought it was more.
Yeah, so there's a couple things to kind of point out here. It's a great question. So first, just to clarify, it's about 91% of all spot volumes are out of the United States, not just on chain, right? So all spot volume trading, 91% is primarily outside of the United States. And so that raises your question, like, why do people give a shit about the United States and what they're doing so much when the majority of the flows are outside of the United States? There's a couple reasons why. One, whether we like it or not, the rest of the world takes a lot of cues from what the United States does, right? So one of the things that we've seen, I mean, this has changed over the past couple of months, but leading up to the past couple of months, you know, we met with regulators in like Abu Dhabi and Dubai, and the folks in the United Arab Emirates are doing amazing work to push crypto regulation frameworks and clarity and all that good stuff forward. However, they take a lot of influence from what the SEC does. And this is the case for a lot of other regulatory agencies in the world. They're looking at like, what is the SEC? What is the CFTC? What is the US Treasury doing so that we can kind of like adopt their principles, right? Because I think in theory, if it's good enough for the United States, it's probably good enough for a lot of the other regulatory agencies around the world, because the United States is the largest market on the planet, period, you know? And so one aspect is the regulatory kind of influence and how that affects other agencies around the world. The second aspect is the United States is the largest market in the world. And if you actually, we track this at Asymmetric, if you look at the time windows throughout the day, there's basically 3 trading sessions. There's Asia, there's Europe, and there's, you know, North America, if you know, if you want to call it that, or US hours. We just, you know, kind of track it to US equities, for example. And it turns out that recently the majority of the activity, the volatility in the markets is during US hours. Well, if it's only 9% of total spot volumes, why is that really the case? I think it has a lot to do with the fact that there's the regulatory overhang, and because the US could potentially become the largest market for crypto, that we have thin order books, we're in a bear market, liquidity is draining, you've got all the scams and frauds and shit that happened in 2022. So what actually happens in the US actually matters right now. However, that presents great trading opportunities for non-US hours, or if you have a view that, you know, Gary Gensler says a thing and, you know, crypto sells off during US hours, but you think it's bullshit, it probably rallies during Asia or Europe. You know, one of the things that we always do every day is when the US hours close, there's about an hour difference until Asia kind of like wakes up and gets going. And so when Asia wakes up and gets going, it can be a clue as to how the next US trading day is going to take shape. And ironically, I think it was on Sunday night, which is probably Monday morning Asia time, first time in a long time they started buying crypto first, like actually leading. And what we want to see is a better balance or a better distribution of geographies and how they're actually trading crypto. Because if you look at like Europe and Asia, for the most part, they're like mostly sideways throughout the days for the past number of months. And then all of the ups and downs happen during US hours.
Yeah, Lucas, I hate to admit it, but, you know, I admitted to Andres, but for the first time ever in many years, I started believing in technical analysis, and it's because of Joe McCann. Like when he posted like, oh, the Bollinger Band's never been so close. This either means Bitcoin is just going to pop, and the constant analysis, especially the other analysis that you do in macro. I remember you talking about the SoftBank situation, and that's really getting me to like, I need to learn more about technical analysis, because you're right. When you have 3 trading sessions during the day, the momentum is built, and it's kind of dumb not to make it if you're actually seeing it in the patterns of technical information.
Yeah, I mean, look, like the joke that I always make about technical analysis is that it never works, and then I show a chart where it works every time, right? The thing about technical analysis is that most traders just want an easy button that they can press. Like, I just want to know when to buy, right? And those traders never make it, because that's not how you become a good trader. A good trader has multiple information sources to validate or invalidate their view, right? You actually have to have a view. You know, in my you know, Telegram chats, and people will always ask me like, should I buy more? I'm like, I don't know, should you? right? Like, what is your view on owning an asset or making an investment? Like, that has nothing to do with me.
Market mercenaries, right? That's the Telegram.
Yeah, the market mercenaries chat. Yeah. One of the reasons why I use technical analysis, flows, macro, the fundamental changes in the underlying technologies of crypto, like crypto protocols, et cetera. These are multiple information sources that you have to synthesize to have a higher probability outcome, right? The key here is that people think like technical analysis doesn't work because of this one time this signal didn't actually do what it was supposed to do. It's like you're viewing it completely the wrong way. No one can predict the future. No one. I don't care how smart you are, it's not possible. So what you can do is try to improve the probability of an outcome. What is the probability that this trade is going to go up or down or sideways or whatever? And technical analysis can feed into that, right? I posted a thread, I think it was back in March, where like every single crypto asset had tagged what's called a TD9 buy. And this is TD9. Like, you guys can look it up. It's called Tom DeMark is the guy who invented this signal. It's a well-known signal in TradFi and folks in crypto use it. But typically when a TD9 buy fires, you get the 9 buy. It's usually the sign of a reversal, right? It's no guarantee, right? It's not a guarantee. However, then I saw it, a TD9 across literally like every crypto that I was just like, I stopped looking because I was like, every single one of them is a TD9 buy. And so what does that mean? Does that mean I'm going to shove all my money that I have into crypto and cross my fingers that this is going to work? No, what that means is that there's a high probability that this thing bounces, right? Like there's a high probability that this is the low. And the fact that it's across the board likely means that the majority of the market is washed out and oversold. That's when you should be buying things, right? You shouldn't be buying things when, we're up, whatever, 150% off the lows and like, it's kind of trading sideways. Like, no, you should have bought when it was much lower. And so, I think that like the technical analysis piece, like I love it because I'm a math guy. I started trading with technical analysis and evaluating the tape reading and order flow management. And look, like I've been doing this a long time. There's guys that are doing it much longer than me that are way better than me. And I tell people all the time, like, I'm still learning, right? Like I make mistakes all the time. The difference is like getting out of your mistakes faster instead of like being married to them and like doubling down on them. Like, no. The key to winning and trading and any asset class is survival. And if you can survive, you'll make it in crypto. I promise. This thing is going up and to the right, whether people want to believe it or not. And so as long as you're still in the game, you'll do great.
Yeah. No, the reason I bought Bitcoin the first time, it was because I went to lunch in 2013 and I heard the guys from Stellar Luminance talking about, we're doing this. And I'm like, I got curious and went and bought a few Bitcoins at $100 and it has been amazing. So one other thing that I wanted to ask you, what is it, Joe, that like smart people, like for example, Jack Mallers, Jack Dorsey, and Nicholas Taleb don't get when they start talking about Solana, Ethereum? Is it because they're pushing their own bags? They have an agenda? I always get confused when like smart people just can be wrong and that's it.
Yeah. Great question. I'll have to hop onto another call here at the end of this, but so let's talk about Taleb. I'm a huge fan of this guy. His writings, I think they are extremely valuable for risk management, how to view life. I mean, the reason my company's name is Asymmetric is because part of being anti-fragile, which is one of Taleb's books, is identifying opportunities that have asymmetric upside with limited to no downside, right? That is, I mean, people would be like, well, yeah, of course I want to do those types of things. It's like, well, then you need to live that methodology and that kind of philosophy, right? I disagree with Taleb on his views on Bitcoin and crypto. And, you could look at some of the way that he's trying to rationalize his view on it. And it sounds kind of like a petulant child crying at a playground because he's not getting to go on the swing or something. It's just nonsense. It's very shocking, because for someone who I admire intellectually and still believe a lot of his writings are some of the best contemporary philosophy out there, it's really surprising to see this. And so you have to also ask yourself this question, right? Why does Bill Ackman, who is a hedge fund manager, why does he go on, CNBC crying about like the government needs to do something, blah, 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 in 2020 when COVID is crashing? Because he's short and he's like, wanting to cover his bags, right? Like, the thing I think you have to recognize with what people are saying relative to what they're doing is very, very, very important. You're not going to know what Taleb's bags are. You're just not. But if someone is going on TV, I always like 180 what they're doing, right? Like I'm always like, why are they like, so for example, there's an actor who was recently on CNBC earlier this week he's like crypto crusader. He's against crypto and all that. And it's like, on the one hand, the crypto Twitter gets all spun up around this actor. He's such an idiot. Like, why is he trying to fight like what's happening with crypto and blah, blah, blah. But it's really simple. This actor isn't relevant anymore. Guess what makes him relevant? Going on CNBC and getting a bunch of people on the internet to talk about it, right? So instead of looking at like what they're saying, like try to think about it like at a second order effect of why is this guy going on CNBC saying this? Why? It's not necessarily that the direct thing they're saying is relevant. In this case, this actor is no longer really relevant in like the cultural zeitgeist. He wants to be relevant again, right? It turns out, by the way, this is exactly why Elizabeth Warren created her like anti-crypto campaign. People think that Elizabeth Warren is like actively trying to, stop crypto. No, she's not. It turns out that her staffers realized that she was losing relevancy with her voting base of young adults. And one day, someone tweeted from her account something that was anti-crypto, and it got the most engagement on Twitter that she had had in months.
Wow.
What does that tell you? Well, let me keep doing this, because as a politician, my only job is to maintain getting elected and staying in office, not actually adjusting policy and making real improvements. Unfortunately, that's the way the United States political system is set up today. So why is Elizabeth Warren anti-crypto? Because of all the engagement she got from one tweet. Has nothing to really do with policy. So again, I would look at it like, yes, smart people can make bad decisions. Yes, smart people can look dumb at times, et cetera, et cetera. Tune your brain to think about not what they're saying, but like why they're actually saying it.
Yeah, what's their mirror strategy? Yeah, correct.
Super fast for our viewers, because I know you just said you have to go, right?
Yes. Yes.
Your Asymmetric, the fund, is it open? Does it have a minimum ticket? And do you only do crypto, or do you do traditional stocks as well?
So yes, the fund is open. It's a Cayman master feeder structure, so we can accept foreign money, U.S. money. We use KPMG for tax and audit. We have MG Stover, which is the top fund administrator in the United States for crypto funds. We are a primarily digital assets crypto focused fund. However, we do have a relatively strong set of macro expertise. And so the way that our limited partner agreement, where if people want to invest, they would be limited partners. The way that it's drafted is that it's pretty broad in terms of what we can invest in. And that's intentional, is that if you're not comfortable with me managing your money, you probably shouldn't put money in my fund. We have ideas about certain macro products that we may want to trade, like US treasuries and rates. We have done exactly 0 trades of those to date, but it is we have the flexibility to do it.
Capacity.
We have the flexibility and capacity. And also, like, candidly, if you've read any of our market updates, we basically crushed the macro side. So we're like, why wouldn't we just add this?
I always share them with them.
Yeah. So, and then what I do recommend, like minimum ticket size, accredited investor, all that kind of stuff. If you go to asymmetric.financial, there's a button that says, investor inquiries. Click on that button and fill out the form, and we can get in touch with you guys.
Amazing.
Joe, where can people follow you? And I'll share the Twitter on the description. Just your Twitter.
Yeah, Twitter's fine. you know, Twitter or like, you know, my Telegram stuff, you already know where to find me. So yeah, twitter.com/Joe McCann, asymmetric.financial, go asymmetric on Twitter. Like, yeah, all those places.
Yo, this has been amazing. You've been very generous with your time. Hopefully we can have you, I don't know, in 6 months or a year, or maybe we can, I don't know, when the kids are a little bit grown up, you take them down to Medellin and you come and visit us down there.
I would love to come back to Medellin. Let's make that happen.
With the
All right.
kids. No
Yeah.
issues. With the family.
Yeah.
Thanks for your time, man.
So,
Ciao.
thanks a lot, man.
Bye.
No cuelguen, muchachos. Hey, Lucas, este man es muy cuchilla, weón. Por eso te había dicho que no.
¿Y
que
no lo
te la
seguís hace
puedes-
rato?
Marica, yo lo sigo hace rato porque cuando yo empecé a tratar de entender qué era Solana con Anatoly es muy denso, huevón, en toda la parte pues de código y ese man escribe y yo te digo pues que entiendo el 20%, el otro 80% soy totalmente despistado. Pero como este man ha trabajado en agencia, como este man es trader y como este man tiene background técnico, entonces ese man lo digiere más desde el punto de vista de negocio. Y entonces ese man hay veces llega en Twitter y se pone como una gotica y dice alpha drop. Y yo, no, ¿qué va a decir este man? Entonces lo he seguido en un montón. Yo tenía un montón de preguntas, los NFTs.
Sí, es que habló largo y no tenía más tiempo, exacto.
No, pero habla largo, pero
Pero
entonces...
súper
vos-
bien, pues, y súper fácil de entender, o sea, súper
Pero vos
pues,
mira que, por ejemplo, las preguntas que siempre nos hacemos en el chat. Hey, Hernán, explica pues por qué Solana es tan importante. Entonces, y la pregunta era, can you elaborate on stateless composable machine? Mire que se gastó como 30 minutos. Luego DePIN y luego mirar los puntos que me parecen muy pragmáticos, como explica lo que es una Elizabeth Warren, o sea, si hay miedo, no hay miedo, lo que está pasando en las tecnologías, los paralelos que él ha visto, es que sirve mucho. Vos porque no has tirado código, pues yo tampoco.
Hoy entendí, huevón, por qué habla tan mal de mí Carlos Antonio Vélez, huevón. Acabo de entender.
Sí, ¿por qué? Explicanos.
Por lo mismo que Elizabeth Warren y el actor y la actriz están...
Ah, sí,
porque
claro, por la misma cosa.
es lo que le genera, eso es lo que le está generando tracción, hablar mal y criticar sin saber, weón, punto.
Y la otra es que uno no debe responder a las pendejadas.
Pues no sé, weón, ya estoy mamado, mamarica, ya estoy a punto de explotar. Es que ya cuando te la velan y te la montan y van dejando una cizaña en el aire de deshonestidad, man, que
Sí, eso es lo triste, ¿no?
Sí,
Eso es lo teso.
yo hasta ahora callado, hasta este momento que hablé porque veo que estaba grabando, pero
Pero te fue bien con Edwin.
súper bien con Edwin y súper bien con otro negocio que hicimos con Santa Fe, que también ayer habló y el man marica, el man tiene una capacidad de creatividad.
Entonces, ¿puede hablar o no puede hablar? Para que después no nos diga mute.
Sí, no, ya que, pues, ya, pues sí, ya.
Pues ahí también que se dé cuenta que es un pendejo.
No, que de verdad, que es el reverse, el por qué lo hace, por qué.
Pero mira,
Sí,
ese experimento, pues el staffer llega y se tira una cosa y dice Bitcoin y ven que eso le dieron retweets. Hey, Elizabeth, este es el mensaje que tenés que mandar y lo otro que me gustó mucho de este man era la capacidad de desarrollar paralelos. Una película que nos vimos Darío y yo en estos días fue la de BlackBerry y uno los veía como solucionando y uno ve como esas historias en pequeñas instancias repetirse. Lo que siempre es que hay un montón, pues como se dice en inglés, incumbents que no creen, pero uno va viendo esos patrones. Yo la única razón porque soy tan bullish en Solana es porque yo ahí veo un patrón que estoy viendo desde que empecé Internet, pues desde 1999, con esa historia que contaba de los servidores. Entonces, y Darío también la ha visto, entonces me parece súper bacano. Y
Pero ¿sabes qué? Saco un poquito también que... Es más, sí, estamos muy all-in en Solana, pero vos haces bien en también tirarle a las aplicaciones encima de Solana, render, bueno, Shadow, en el caso mío, Shadow, sí. Pero yo estoy solo Shadow y Solana, yo no tengo nada más.
Shadow, un cachito de render, pues, pero si una de esas sale, con eso es suficiente, uno no necesita, pues, mira el caso, Lucas, con lo que habíamos hecho en inversión en Palantir, esa maricada se ha metido una desatrasada
de locos.
Descomunal.
Yo no he vendido por usted, huevón, pero yo no he vendido por usted.
Pero qué man pues, qué profundidad y tiene mucha cancha, pues, y el bagaje.
Y calidoso, buena gente, sé que es más loco que una cara, no le cabe ni un tatuajes. Imagínate, un man soltero hace yo no sé cuántos años en Medellín. Ese man donde vaya hoy a Medellín se separa otro día, huevón.
Pero qué chimba que estuvo en Medellín, no.
Qué nota, o sea, una grata sorpresa. Oiga, usted ahí, papita para el loro, papita para el señor, no. Pues puta, tenía que ser en Medellín, ¿sí o qué? Porque no conoció Cartagena, el man, ni Bogotá, ni
No, nada, solo Medellín.
Medellín. Claro que habló de Ruta N, ¿no?
Sí, sí.
Bueno, sí, no, es que no todo tiene que ser, no todo tiene que ser mal. No, pero
No,
estuvo
muy bacano, weón, muy bacano, man.
interesante. Oíste,
Qué
estabas muy
buen invitado.
sí, estabas muy perdido, pues yo sé que estabas en vacas y empezaste a camellar duro. La próxima semana tenemos otro episodio bueno que es, pues, siguiendo todos de Medellín, que es la Medellín que nos soñamos, pues, con Lucas
De
Gómez.
putas. Es que, ¿qué pasa, parce? Pero ya pues tengo mucho más tiempo. Es que esta es la época mía más crítica, porque este es el
Negocios.
mercado que se abre, se cierra,
Claro.
entonces coja un avión tan, pues pucha. Y hoy los medios y el Twitter, y es un poco lo que estaba hablando el man, hoy son buscando la noticia, buscando el chisme, buscando la primicia, y uno sabe ese el enredo en el que yo estaba, porque lo de Edwin Cardona estaba anunciado en todos los medios y no estaba cerrado. Yo no había cerrado ni con el equipo de México ni con el de Argentina, estaban en la mitad y eso se volvió un enredo, parce, que, o sea, me estaba cayendo el pelo, me estaba muriendo, weón. Me
No,
tocó
no,
arrancar para Cali, quedarme en Cali, esperar, de ahí devolver para acá.
Lucas, perdón, Darío y yo a veces vemos los comentarios de los TikTok y nosotros decimos, este man, weón, ¿por qué le tiran tan duro, weón? Y en
Le tiran
Twitter,
tan
weón,
duro.
nosotros decimos, yo, hey, un poquito de solidaridad, a ver que se metan con otros, pues, como que, hey, no casque el primito.
Pues yo ya gozo, yo la verdad, antes, yo ya gozo con eso, weón, ya digo, pues listo, bacán. Como me dijo un pelado que trabaja conmigo, ¿cómo es que es la frase famosa de Don Quijote?
Los
Ladran.
perros ladran.
Que no es
Cabal.
de Quijote.
Sí, sí. Entonces, pues, hágale, todo bien. Mientras yo conozca mi ética y mi honestidad, el resto vale huevo.
Así
Bueno,
es,
pelados, me abro porque no ha cerrado el mercado.
este no lo vamos a traducir, Darío, yo creo que vámonos así en inglés, hermano, y que la gente le ponga transcript.